Hey everybody, Kimosabi here, giving you a little update on what I'm seeing with the wave structures and bringing to your attention the 4-hour chart and a comparison of wave structure from back in February. Looks exactly like what's going on now, which is pretty impressive. So back in February you had 3 waves down. Currently we have 3 waves down. Back in February, some kind of pop-up. Currently have some kind of pop-up like that. And did this choppy stuff sideways. And then popped up. Choppy stuff sideways. We might pop back down again. But this might resume upward from there without breaking those lows if this pattern repeats. And there's a reason that I would think that it would repeat just the same as it did. And to do that, we'll zoom in on one of these charts. Let's see if the 4-hour can grab it. Where the price action is. Nope, we have to zoom out to a daily. So here on the daily chart. And let me take a screenshot of that. So that price action back in February is this little bit right there. Zoomed way in, of course. But if you zoom right into what's going on now, then it matches perfectly. So if you take the way that I usually do these waves, that would match that. Because the way I matched this price, this leg right there matched that one. So we're coming off of there. Those look like they match, so expectation could be one more pop-up. The pop-up target is between 98,000 and 101. So be cautious there. If that pattern does end up matching, won't know until it does. But coming out of there, you may see this pattern repeat right there. It might look like a 3-wave pullback to backtest the top of like 94K and then flush down, and you get a pretty decent pullback. Maybe as deep as 76. Maybe fill that gap on the CME. There's a potential for that. But coming out of there, there's a potential for this pattern to repeat, just to pop back up and chop like that for a few weeks. Then your target becomes 155,000 to 170,000 in fairly short order. So if this drop does come, when does it come? Maybe at the next mid-cycle low. Follow Camel Finance to know his cycles, kind of what he's looking at, but I'm expecting early December, probably around the 5th, maybe as late as the 10th. We might have this pattern replay like that and then pop up and get bullish. So let's zoom into current area and we'll take some measurements. Measuring with the trend-based fib extension. I'm going to get right on that wick, right to that high. Like I said, the correction for me ended right there. That's where I'm projecting from. That gives you a target of really anywhere between 100 and 120, but based upon that little wave there matching that, my target is 98 to 101,000. So if that does come into that zone, it may be an area to look for a rejection. If we do get a rejection and we match this leg down, just take a measurement from there and we'll project from that potential target wherever this stops. Say we take the midpoint right at 100K, and we'll see where the 1-to-1 fib extension goes down to 78, with a potential overperformance to 73.94. So that would be matching that leg. Of course, if that target pushes up higher, then that gives a different target. So if you get up to like 105, then your 1-to-1 becomes 82. If you're able to push up to, say, 109, which would be pretty bullish, your retracement comes back to 85. those targets do seem extreme. There is a CME gap somewhere in that area. Maybe that gets filled. Maybe you consider this a back test of that range. It's all potential, but a drop similar to that is not to be unexpected. But it might be on a closing basis. It may only come back to 85 if we don't tag the 85 now. But I'll try to update it in real time as it's coming down, and we'll see where the buy setups are. We'll update as it comes. Let's zoom into the 4-hour chart and see what we have here. And in Elliot wave terms, this could be a wave 4, wave 5 of some sort. This is wave 4 coming back to wave 4 of lesser degree. This can be 1, 2, and let's get a target if that is the case. You would have a wave 1. This is wave 2, giving you a target of 103, potentially. Let's draw that out for Elliot wavers. You have a 1, 2, up here is 3, potentially a 4 that pulls back to like 94, and then one more leg up. Something like that to get you over 100K. We'll see if we get it. As long as the 4 hours closing higher highs and higher lows, this is in the cards. So to start aligning the trend again, you had a high, a low. That was a lower high, lower low. Now you're closing a higher high right here. This did not close a higher high. So there was no resumption off of that, because as you can see, this low is just a little bit lower than that. So now you have a higher high close. It's higher than that. So now your trend is a low high. That's a higher low for now, and a higher high. So as long as you're closing 4-hour candles above the daily open at 89,886, then you can resume upward. If you were to see this leg match this leg here, with then a sharp pullback similar to that, back down to the daily open, I would potentially see one more push up like that. That would look really good, and that would actually complete that move potentially. So that's why we take profits at a break of a high, because this can be A, B, C, and you're coming back to here to grab these liquidities. Totally possible to do. A, B, C. Of course, to start pushing down, you need to start making lower lows and lower highs. I would definitely like to buy down there, especially if we get this pattern repeat from up here, something like that. Grab that liquidity and then shoot up like that. That's an even more bullish pattern than just making 100. Say, for example, you do repeat this leg from somewhere in this vicinity, and then from there you get a very strong move up similar to that. Then you would have an ABC similar to that. Then you repeat that leg. And that leg has a target of 115 or something like that. But one step at a time. If this goes up from here, expect 98 to 103. If you pull back and grab this liquidity, you have the potential for much higher targets. Because that's all the market needs to push itself up. It needs the liquidity. So this liquidity would end up being fuel to go further up. But if you go up from here, you're going to revisit this area at least and maybe go lower. There are so many orders down here, so that's going to be a liquidity zone for me moving forward, whether we go up or if we come back and grab it. Either way, I'll trade it as it comes. But for right now, you have a higher high. Maybe get a higher low right there. Maybe it comes and back tests the daily open, but still closes a higher low. You can push up. Now I'm going to throw on a fixed range volume profile on this 1 hour chart here from that high made last Friday to current area. So it has a point of control that I want to mark off. You guys may find this interesting, similar to previous videos. I'm going to mark off that line, and then we'll get this thing out of the dang way. And from that VPN, the volume profile line, before it you had this contraction zone into a high volume node on that volume profile. So that, to me, is where the banks are interacting, where they're balancing their books. The banks brought price down, balanced their books over here, got long, balanced their books here, and over the weekend, you can see that range was respected. They pushed it down, well, 3 times, 1, 2, 3. And that was them filling orders over the weekend to potentially send this up. So the area that I'm watching real good is the 91,272 range. If price stays above that, they're going to trend it up. If price breaks below that, then this was their liquidity grab and they're coming down for lower prices. At least that's the way I'm looking at it for now. So they may hold it above this line. You may have a resistance turn support, and this is going to go up from here. If you are trading this long, my stop loss would be 88.7. Actually, I'd probably put it a little higher, probably 88.970 or something like that, into that wick, because if you come back this low and you're below the daily open, if you come that close to the wick, you're probably going to take it out and then come fish after these liquidities. So keep your eyes open, keep your stops tight. Those are my thoughts. Good luck trading it. It could get very volatile, and it could stop on a dime in reverse. So definitely keep your head on a swivel there. Yeah, that's all I got for now. Watch your trend. 1 hour is now closing a higher high. Look for a higher low to buy. Probably up above that 91,272 range that the bank set forth on Friday, where they balanced their books. So now they can take it higher. Hope that was helpful. Yeah, have a good night. Keep your stops tight.